You know that feeling, right? That moment you finish filing your taxes and for just a split second, your heart stops. You have no idea what that final number is going to be. Are you about to get a nice refund, or are you facing a surprise bill you totally weren't ready for? It's this yearly anxiety millions of us go through. But what if I told you you could pretty much eliminate that surprise altogether? It really just comes down to understanding one core idea behind the whole US tax system. Yeah, the stress around this question is very real. But here's the thing, the outcome, whether you get money back or have to pay up, it isn't random. It's not a lottery. It's actually the direct result of how you've paid your taxes all year long. And the good news is, you're the one holding the controls. So let's take a look at how this whole system is really designed. So the secret to all of this is a pretty simple concept called pay as you go. Think of it like your electric bill. You don't get one giant, terrifying bill for an entire year's worth of power in December, right? No, you pay for it in smaller chunks, month by month as you use it. Well, the IRS basically works the same way. They want you paying your income tax as you earn your income, not in one huge lump sum on tax day. Okay, so to make this pay-as-you-go thing happen, there are basically two main roads you can go down to pay your taxes throughout the year. And which road you're on really just depends on how you make your money. All right, so path number one is tax withholding. This is the automatic set it and forget it route. It's mainly for employees, where your company just takes the tax right out of your paycheck for you. Then you've got path number two, estimated tax. This is the manual route. It's for all the self-employed folks, freelancers, or anyone with a lot of income from things like investments. With this one, you're the one who has to figure out what you owe and send in the payments yourself. Let's start with withholding, because honestly, this is what applies to most people. Anyone earning a salary or wages. If you're an employee, this is your side of the pay-as-you-go deal. It's pretty straightforward, really. Your employer does the math and pulls the tax from your regular pay. They even do it for other stuff like bonuses or commissions. Then they send that money straight to the IRS for you. It all just kind of happens in the background without you having to do much. Now, you might be wondering, how does your employer know how much to take out? They aren't just taking a wild guess. You tell them. And the tool you use to give them those instructions is the Form W-4. Seriously, think of this form not as some boring piece of paper you fill out on your first day, but as the actual control panel for your taxes. So if the W-4 is your control panel, how do you get good at using it? Well, the trick is to stop seeing it as just new hire paperwork. You need to start seeing it for what it is, a living document, a tool that you can and should adjust whenever things in your life change. The W-4 today is actually broken down into a few simple steps. Step 1, that's just the basics, your filing status and stuff. Step 2 is super important if you or your spouse have more than one job. Step 3 is where you claim dependents, which can make a huge difference in your tax bill. And then step 4 is for fine-tuning everything else. Maybe you have other income or you just want a little extra taken out to be safe. Okay, so if the W-4 is your control panel, when are the key moments you should actually be reaching for those dials? Because it's definitely not just when you start a new job. The IRS actually recommends a W-4 checkup anytime you have a big change in your life or your finances. And as you can see here, they mean a lot of things. We're talking major lifestyle events, like getting married or having a kid, but also financial shifts, like starting a side hustle or your spouse getting a new job. Even changes in your investments or tax credits are a good reason to pull out that W-4 and make sure it's up to date. All right, that pretty much covers the withholding path. But what if your money doesn't come from a regular paycheck? You know, if you're a freelancer, you run your own small business, or you have a lot of investment income. Well, then you're on that second path, estimated tax. See, with this kind of income, there's no employer to automatically take out taxes for you. So that job falls on your shoulders. We're talking about money from self-employment, dividends from your stocks, capital gains, rental income, you name it. Even prize money counts. So the big question is, how do you know if this applies to you? Does your financial life mean you need to be the one sending payments to the IRS 4 times a year? Well, the general rule of thumb from the IRS is actually pretty straightforward. If you expect to owe at least $1,000 in tax for the year, and that's after any withholding from other jobs is taken out, then you probably need to be making estimated tax payments. And to make sure you don't get hit with penalties, you've got a target to aim for. It's often called the safe harbor rule. Basically, your goal is to pay either 90% of what you're gonna owe for this year or 100% of what you owed last year. Whichever of those two numbers is smaller, that's your target. Hit that, and you're generally in the clear. So look, whether you're on the withholding path, the estimated tax path, or some mix of both, the big takeaway here is exactly the same.
Don't just set it and forget it. The real key to avoiding that shock on tax day is to be proactive.
You know, what's really interesting is this quote, which comes directly from the IRS. Their goal for you isn't to get some massive refund. I mean, think about it. A big refund just means you gave the government a zero-interest loan for the entire year. The perfect scenario is to get as close to zero as possible. You don't know them, and they don't know you.
And the best part is, you don't have to be a math whiz with a complicated spreadsheet to figure this all out. The IRS gives you a free, official tool. It's called the Tax Withholding Estimator. You just go online, plug in your info from your pay stubs and other income, and it will literally tell you exactly how to fill out your W-4 to get the result you want.
And that's really what this all boils down to. Taking just 10 minutes, maybe halfway through the year, to use that estimator tool can totally change your tax experience. It turns tax day from something you dread into a predictable, boring non-event. And boring is good.
So as we wrap this up, I want to leave you with this one question to think about for yourself. Is your W-4 set up correctly for what happened in your life this year? Did you get a new side gig? Did your financial situation change at all? Take a few minutes, check the settings on your financial control panel, and make sure you're steering yourself toward a surprise-free tax season.